My name is Gil, and I am extremely excited for the second time to have Ashraf Laidi with me. Ashraf, how are you doing?
How are you, Jill? Very good. Good to be back.
Wow, I must say the timing couldn't be better than I mean we planned this talk a month ago, but I think today it's a much better time than a month ago. So many things are happening in the markets. And for those who don't know Ashraf, Ashraf is the ultimate expert on intermarket analysis. And I can tell you, Ashraf, I am studying the markets at the moment and I'm confused. I see so many things going on in the markets and I can't put the puzzle together. And I really hope that in this hour, you will help me and maybe also the other viewers putting some pieces together and get a clearer picture of what's happening in the markets.
Yes, Jill. I mean, this is part of the fun of the markets. I mean, we're here to make money, and if the endeavor of making money was always easy and it was always straightforward, then nobody would be making money, right?
Exactly.
Yeah, I mean, every 3 or 4. But first of all, I have to apologize for the little tech issues that we had. Unfortunately, I'm not able to go on my laptop, so that's why maybe the lighting is not as good as it usually is on my side. But hopefully the sound is good.
The sound is good, and you look good, so no problem with that.
All right, thank you. Yes. Well, next Wednesday will be the Federal Reserve decision. Widely expected no rate change. But it is also expected to be the meeting, as you know, next Wednesday is going to open the door for what is expected to be a 99% chance of a rate cut in September.
Mm-hmm.
And the next Wednesday will be the last event of the Fed. But then we are going to have a few things. We're going to have 2 more CPI reports, 2 more job reports, and before the September decision.
And the Jackson Hole Symposium in the middle.
Exactly. So interestingly, I actually have it written somewhere on my Skype WhatsApp group. I'm just going to open it because that week, so Jackson Hole is around the last week of August, but Powell usually speaks around Thursday or Friday of that week. And I just want to show, but there is another event that is coming in around that Jackson Hole. I have had the dates. Yeah. So So we have Jackson Hole between August 29th and the 31st. But August 28th, Thursday, guess what we have? We have NVIDIA earnings. So, yeah, for people who are listening, sorry, I cannot do the share image, but the important dates right now is, so July 26th. So next Friday, so this, after tomorrow, tomorrow we have the core PCE, which is the Fed's preferred inflation number. Don't worry, listeners, we're not going to bore you with the agenda. Oh, tomorrow is this, Thursday is that, Wednesday is that. It's my daughter's birthday. It's my wife's birthday. No, we're going to do more than that. Don't worry. Be patient. But August 1st, we have, so July 31st, Wednesday, we have the Fed. August 1st, we have Apple earnings, Thursday. Friday, August 2nd, we have the U.S. job numbers. And then nothing happens until August the 14th, which is the CPI. And then we have August 19th to 22nd, we have the Democratic Convention.
It's also very important.
And then we have August the 29th, NVIDIA. 29th or 30th, we have Powell's speech for federal. And then we have probably September 10th, a possible September 10th Kamala Harris, Donald Trump debate.
Amazing. So we will talk of the future, but I want to scroll a little bit back because here is my observation. And part of it I expected. We finished the second quarter, and I said we had an incredible increase in a couple of sectors, mostly communication and technology sector, driven by AI. And I think this is also why you mentioned NVIDIA earnings and Apple earnings, because they were the driver of the first half a year of NASDAQ and S&P 500. And it seems some change happened. Now, I don't know if it's a combination of both, but you can explain this better. But I feel like the first change is that maybe portfolio managers thought, you know what, we made amazing returns in the first half a year. Let's take some of those returns and put them into weaker sectors. That could be one explanation. But the other explanation is also that suddenly we get this we go toward an interest rate cut finally. And so there is also changes happening there. And we see suddenly, yes, the expectation really goes up. And therefore, we see changes in Japanese yen and other things. And now here, the things that confuses me, and I think you can help me put everything together. Normally, when you have interest rate cuts, this should be good for the stock market, also for technology sector. You should see actually a rally. Yes, so here, I would like to hear your opinion on this. What is really going on here?
Yeah. Okay. All very good questions. Yeah, this is. I think I agree with you with what you said. But there's some very, very important thing we want everybody to pay attention to, because what we're going to say here could be, I'm going to speak clearly and loud and slow. Yes, I think you're right. People, they made their money in the NASDAQ. I did a YouTube video yesterday, and it was primarily in Arabic, but the English part is well translated. And I showed a graph of the NASDAQ and the Russell together.
Mm-hmm.
And it is on my YouTube channel. So if after this, you can look it up. And basically what it is, Jill, since the beginning of the year, percentage-wise, you have the NASDAQ right now is up 20%. Okay?
Mm-hmm.
The Russell 2000, and for those of you who don't know what the Russell 2000, it's basically an index of small cap stocks. And the Russell 2000 right now is up 15% year to date. So the NASDAQ is up 20 and the Russell is up 15. So the difference is 5. And that's not a lot. But here is the thing. And this is what I showed in a chart on my YouTube video. But on July the 10th, because if you remember, Jill, the NASDAQ started to fall over around the 14th, the 15th, 16th. And then we had that very bad, ugly July 17th. Last Wednesday, we was a gap down.
Yes.
And the reason that happened, for those people who like reasons, there were two reasons. One was that fears that the U.S. administration, whoever is going to be, is going to crank up the tariffs, is going to tighten the punishment and the restrictions on companies that trade with China. So Taiwan, Shanghai, Taiwan semiconductors fell, and every AI related fell. So, and that fell, and then NVIDIA fell. But then there was another reason where basically J.D. Vance, who was just appointed the vice president nominee for the candidacy of Trump, he basically came out and he said that he's going to make a change in a legal rule that basically will make it easy to have lawsuits against tech firms. So that was a perfect storm for tech firms to fall. And July 17th, we fell. Now, before July 17th, NASDAQ was up 26% year to date. But the Russell was only up 5%.
Mm-hmm.
And so basically, and then there was even a report by Goldman Sachs that basically said, this is what's going on according to our flows. Basically, what's going on is that all the asset managers who made their money in NASDAQ and so on and so forth, and technology, they sold, they locked in profit, and they went to buy Russell 2000 small stocks, which were at the time only up 5% year to date. Now they are up 15%. Now, there is something else that you touched upon, which is very important, which I really need to address. Two things. Was rate cuts are good for technology.
Mm-hmm.
And I put, again, you guys who are listening, you go to my YouTube channel. Don't go to the video that I posted yesterday. Go to the one before yesterday. And the one before yesterday, I basically do an illustration, and it shows that be careful. Rate cuts. So rate cuts, historically, they were not that good for equities. They're usually good ahead of the first rate cut. So again, not all rate cuts are the same. Now, the last round of rate cuts that we had was in July 2019,
Yes.
when Trump was around. And what it is that when we get close to those rate cuts, when we really get close, gold started to rise, dollar goes down, stocks go up. But when they materialize, when the rate cut materialized, usually, and when I say usually, so in the 90s and in 2002 or 2001 rate cuts, the market would only rally during the first third of the rate cutting period. But then as we go to the second third, as we go through midway, the markets start to weaken because markets are upset because the reason why rate cuts are happening, because there's a weakening.
I started a very interesting discussion about what is happening at the moment at the markets. And Ashraf, you said something important. You said that normally rate cuts, it seems obviously that they are good for the stock markets, but in reality, not always. So I assume that has also to do of the reason why rate cuts are happening. Because rate cuts could happening because we are having a financial crisis, or they could happen because inflation is coming down and everything is fantastic.
Right. And you know what? We always learn something new, and you really have to be careful from us. We are supposed to be the experts. We're supposed to know, these things, but not every playbook is the same. And the experts, the statistical experts, the financial experts, they're always trying to say, which playbook is going to happen this time? Is it going to be 1994 or 95 playbook? Is it going to be the 2019? What is it? So I don't want to complicate things. Let's try to make it easy. So yes, why is the Fed cutting rates? They're cutting rates because the economy is slowed down. However, the economy is slowing down, but it doesn't seem to be going into a recession. And what it is that, yes, the ISM, I know I don't want to bore you with economics, but the ISM is a contraction and so on and so forth. But unemployment is going up, but it's still low. Okay?
Yes.
So here is the way. Now, let me just take you somewhere very recent that many of you were already trading. July 2019, Jill. What happened in July 2019? Now, this is very important. Yes, we know COVID happened, and we know COVID happened in February, March, late January 2020. But the Fed started to cut rates well before COVID because somebody called Trump started a trade war with the Chinese. So the world economy and the U.S. economy was already weakening in summer 2019. And what they did, they cut rates in July 2019. They cut rates in autumn 2019. And what happened? When they cut rates in July 2019, and again, I have it in my YouTube video, the stock market fell for 10 days after that summer rate cut, and then it continued to go up. But, what is the stock market? You have to be very careful. What is the stock market? Today, we have the Magnificent Seven. Summer 2019 was the FANGs: Facebook, Amazon, Apple, Netflix, Google. Those guys were leading the market. So even though they cut rates, the economy was hurting. The world economy was hurting. These guys were starting to go up, but the rest of the market was not going up.
Yeah.
Right? And it was the same thing that we had right now. Magnificent Seven, blah, blah, blah. You take off, you do the equal weighted S&P. The market is down. It's the same thing. Today was the Magnificent Seven. Yesterday, 2019, was the FANGs. Now, here's what happened. The market dropped in November 2019. I remember because I was trading it and I was shorting it and I was making money, and then I stopped making money because I was shorting it. And then the market went up. And then February 2020 came in and Apple was ripping, the FANGs were ripping, and then it was the last stand and everything crashed. Right now is a little bit different. And so the way I'm sure you have a question, but why is it easy for the Russell to go up?
Yeah, so I would say about the Russell in general, what is pondering me, I think, in my opinion, yes, the Russell is going up because it underperformed. I think if you look in a very long period of time, the Russell should outperform the Nasdaq because they are small companies and they have to grow. They grow much faster traditionally than big companies who can grow only 5% per year. So we have here some change. That's what I'm seeing. It's the first thing. And the second thing is the real estate sector is very strong in the Russell. And I think because the rate cuts are coming, the real estate sector became very, very strong. So we see there a switch as well. Now, correct me if I'm missing here something, but this is what I'm... Now here is the interesting thing, and that what I want to ask you also is, so what we are seeing at the moment is not a sell-off. We see at switching in sectors, right? It's not a sell-off. It's no panic here at the moment. There is nothing like this. It's just switching in sector. But there are still some things, and you mentioned when rate cuts are coming, it's not always that good. There are some warning signals that makes the picture a little bit complicated for me.
Yeah, I'll tell you what. I think listeners will only learn by doing. So what I really advise the listeners to do, they put a watch list of the stock watch list. Okay, so you on your mobile phone, you put a watch list on your 30 or 40 different stocks. Okay, and you put in your 40 or 30 different stocks. You put in your semiconductors. You put in a few banks. You put in a few oil companies, and then you put in the things that have been, and then you put in, Bitcoin miners, which I'm a fan of, but then there are these other companies that usually do well when other companies do well. And these are companies' necessities. So companies that are related to, not necessarily pharma companies, but companies that are related to healthcare, companies that are related to pharma. So there is McKesson. I mean, take these symbols, MCK. This company is probably a triple digit, but it does well. You have companies that benefit from that. When you start a company in the United States, or you will have to abide by some certain safety regulation: water, fire, gas, electricity. And what do? You contract a company that does everything for you. It's not sexy. Nobody talks about this when they go to a wedding or they go to a party or when they go to a barbecue. They don't talk about these companies. They talk about Amazon. They talk about NVIDIA. They don't talk about a company that went up 520%. And when the market drops 10%, they only drop 3%. Nobody talks about these things. But for instance, in my WhatsApp broadcast group, I told them about these companies like that. And when you go to your phone, to your mobile, and you see that, oh my God, Nvidia is down 4%. Oh, yesterday Tesla is dropped, blah, blah, blah. Tech is down, but these companies are up. So you have to learn to diversify. And how do you diversify, and what kind of companies is it? So, and I just want to say something. I would like to use the metaphor for small cap stocks. They're like altcoins. And your Magnificent Seven is your Bitcoin. So in July 2019, when the Fed started to cut rates, Bitcoin decided to drop and altcoins started to go up.
So also there we saw the switch, but eventually turned, I mean, nobody could foresee in July 2019 that we get COVID, and then eventually everything falls, at least for 1 month. But what, by the way, also was interesting, in July 2019, or around this date, we got for the first time a negative yield curve, which is also quite interesting.
So this is very interesting. So the yield curve has never been wrong, right? It has never been wrong. When the yield curve is negative, that means when long-term interest rates go below short-term interest rates, okay? And when they stay, when the 10-year yield go below the 2-year, or the 5-year yield go below the 3, or the 3-month yield go below the 2, when they go down and they stay negative for 3 to 6 months, 7 months, eventually they will predict the beginning of rate cuts. And I even wrote this in my book, which was written in 2007. It was published in 2008, Currency Trading to Market Analysis. And I actually wrote about the track record of yield curves. Now, what is interesting about this yield curve, this is the longest time period that the yield curve has been negative.
Yes.
And I was in Las Vegas at an investment show last August. I was invited to talk there, and I met with a lot of very smart people, and a lot of them were bullish. And somebody, Tom Lee, who was a very famous strategist. This was summer of last year, and I said, "Look, Tom, the yield curve is still negative. Where is the recession?" And then he told me something interesting. He said, "Maybe the recession did happen." Do you remember when the economy was weakening, but the Federal Reserve, but the Bureau of Economic Analysis did not announce a recession? You remember when we had two GDP contractions, but they did not announce it because they said no, this doesn't feel like a recession because unemployment is actually low.
Exactly.
So he said maybe the yield curve did forecast a recession. I believe, Jill, if you ask me, I think that the recession will happen. I don't know how deep. I don't know how hard. Maybe it will be a very small recession. But I think it will happen probably around, I don't know, January or maybe February of next year. I'm not sure.
Okay, that's interesting. So, but couldn't it be now? And this, maybe the next question is, if the Fed starts now to cut rates before a recession is coming, we normalize the yield curve, because if the long-term yields stay at 4.2% and they don't change, but the short-term rates, the Fed rates, is moving down, so from a negative yield curve, we get back to a positive yield curve, and then it seems like everything is normal again.
And then maybe, will this be the first time ever? No, not the first time. It happened twice before. Will this be the second time in probably 40 years where the Federal Reserve is able to go from rate hikes to rate cuts without having made a mistake, without having triggered a recession? You never know. Yeah. It could happen because liquidity is quite plentiful. Yes, interest rates are high, but financial conditions, there are these indices, they are high. And don't forget, the Chinese are injecting liquidity. Mm-hmm. The Japanese, they're still easy. There's still easy monetary policy. The European Central Bank started to cut rates. The Bank of Canada today, they could be expected to cut rates. So economic conditions and financial monetary conditions, they're easing. So things may not be doing so badly. And the stock market is high. So you have the stock marketification of the economy. And a lot of people are sitting on a lot of money on Nvidia and so on and so forth. So I really think, but the dollar is still holding steady. It's not crashing. It's not soaring. It's holding relatively steady. But it would be irresponsible for people to say, let's put a blindfold and long euro dollar and short dollar yen. You have to be careful.
I understand. So now we come to the next question. I know our viewers at XM Live, in every single session, they ask about gold. So with all this playbook that we have in mind, that the Fed cuts rates and that we maybe avoid a recession or maybe not, what is your opinion on gold, and how do you watch gold in comparison to the stock market and what is happening at the moment?
Yeah. So 2 weeks ago, I thought that gold was showing a head and shoulder, and I thought that gold was going to go towards a 2,200. I'm still bullish in gold. I was always bullish in gold, but as far as a tradable correction, I thought we were going to have an inverted head and shoulder. It didn't happen. Gold is very, very well backed by great fundamentals. If you take the weekly chart, for instance, I think, okay, so here's the thing. From a very, very short term, let's start with a short term perspective and then go long term. I think from a very, very short term perspective, I think gold is facing some sort of resistance around 24.25, and it has a nice support at 23.87. If we break 23.85, if we break 23.85, 23.80, we could go towards 23.55, but not more. Now, for the long term, I do think that gold right now is a great safe haven. Not only we never know what happens in the United States as far as social unrest, so that will definitely be good for gold. Regardless of whoever comes in the presidency, the debt situation will still be bad. Yes, on one hand, tax cuts from Trump will be good for the market, but it will be bad for the debt. And gold has to. The only thing that is negative for gold is if we see one or two upside surprises in CPI or inflation.
I understand. We started to talk about the financial markets, the stock market, the changes in the sectors that we are seeing, and turned now to gold. You just finished saying that if CPI, if inflation would tick up again, that would be problematic for gold. Do you see that as a chance that inflation can go up again?
I think, okay, here's the tricky part. First of all, it's not just CPI, it's core PCE, which we're going to get this Friday. I think it's a bit early, but here's the thing. So on one hand, oil prices went up in the last month. So the question, oil prices will definitely be shown in the next CPI. But as you very well know, the markets also looks at core CPI, including energy. So the question is, will the super core, which is X energy, X shelter, is that super core, the one that the Fed watches, is it going to continue to fall? Is it going to fall or slow down for the third consecutive time? And if it does, then that would be very good for gold and so on and so forth. So I think we really need to see some upside surprises for gold, not only just upside surprises, but upside surprises that will get one or two or three Fed members to say, oh, I think I may prefer to wait in September and not cut rates. And that's why you, Jill, mentioned the Jackson Hole meeting, which is very important, which is around August the 25th or 26th. So, but the question is, if there is an upside surprise in inflation and gold drops, I do think it will be a tradable, opportunity for people to buy in gold. You know what I mean?
Yes.
But Yeah, but I do think the fundamentals are all lined up to be bullish for gold. Yeah.
And I assume, as you mentioned, that you like miners, that you are also bullish on cryptocurrencies, therefore.
Yes, very, very bullish. I am actually diversifying within the space. I have Bitcoin. I own around 6 or 7 Bitcoin miners, and I just bought like a month ago, 3 weeks ago, I bought MicroStrategy, and then I again last week, just before the announcement of the stock split. So for those of you who think, oh, MicroStrategy, what? I'm gonna spend $1,500, $1,600 for a stock. Why can't I buy just the Bitcoin miners who are $7, $10, $12, $13? Well, that is true. Here is the thing. When Bitcoin goes up, and I made this sensitivity study, when Bitcoin goes up, let's say 10%, these miners, they go up maybe 13, 15, 20%, but MicroStrategy goes up a whole lot more. So it depends on your risk capital. But there are some nice stocks, Bitcoin holder, Bitcoin miners, HEUT, and so on and so forth, that are really, really decent. But everybody should be exposed to Bitcoin one way or another.
I absolutely agree there. I will come to the final topic that I would like to talk to you, because it's puzzling me kind of, and this is the Japanese yen. I mean, Japan had an extraordinary monetary policy for the last couple of years, and it seemed like, again, like until the end of last month, that there is only one way, and the Japanese yen gets weaker and weaker and weaker, a huge trend of weakening, and we see the first signs of trend reversal that could be connected, of course, also of the changing of US monetary policy, right?
Exactly, Jill. This is what the Japanese have been wanting and begging the United States to do. They have been saying, you need to help us. You need to talk about rate cuts. Because if that doesn't happen, we cannot go in and intervene. So, and exactly what you said, we are seeing the early signs of a turnaround. Now, for the WhatsApp broadcast group, we had a few trades. We had a long and a short. The long hit the target. The short, we were targeting 155.10. I was being conservative. Now we are 154.57. But here is when we are finished with this, there's 2 other things I want to speak about after this, so I'm going to make this quick. One of them is I'm going to give an interesting surprise and gift to the listeners before we go. But before that, I think the weekly chart dollar yen, the weekly chart in dollar yen, if you put a chart of dollar yen and you put the 55-week moving average, the 55-week simple moving average, you will see that just like we touched the moving average in July 21st, 23, meaning exactly a year ago, dollar yen went and it found a support at the 55-week moving average exactly a year ago. And then it went up, and then it went back down, and it touched the 55-week moving average in December 2023. And now the 55-week moving average in dollar yen is at around 150. And it corresponds with a trend line support that starts from the low of January 2023. So the question is, right now, 155, 154.50 is being tested, but I think there is a very good chance we're going to go towards 151. Here is the key. What is the Bank of Japan going to do next week? The Bank of Japan is going to meet around almost the same day as at the Fed. If you are long yen, meaning if you're short dollar yen, if you're short Canadian yen, this is another thing. If you think the Bank of Canada is going to be dovish, you may short Canadian yen. But here is the thing. If you think the yen is going to go up, you would want the Bank of Japan next week to do what? There are 2 things they're going to do.
Hiking.
So there's the rate hike, and the other one is to slow down the purchases or to finish the purchases. The purchases of the bonds is going to happen. But Jill, what would happen if they do not rate hikes? If they do not raise rates? What would happen to the yen? It might drop, right?
Again, it depends, because what the Bank of Japan is doing, they are controlling the short-term interest rates like everybody, but they also try to control the long-term interest rates, right? So they try to do, they call it designing the yield curve or something like that. And so it seems to me that totally in grace of what the US is doing, because really rate hikes, how much can they rate hike with 250% debt of a national GDP, right? There is some kind of, they are somehow trapped.
Absolutely. So they're looking for the perfect time for them to see the Fed to cut rates. They will come in with an intervention, and they will see, because they only try to intervene when all the stars are aligned. Like we saw, like if you remember in 2022, they had an attempt at intervening in June 2022. Then they had an attempt in September, and then the real intervention, the successful one, happened exactly to the date, October 20th, 21st, 2022. And that, everybody should do your homework, and you should look for this. You should go to the chart, and you should see what happened on that Friday, October 20th or the 21st, 2022. There was a successful intervention, and it was successful because that week the Fed turned dovish, sort of dovish. So that's what we need. So I think dollar yen, now, is this the time for dollar yen to break below 150? We don't know. I can never trust these guys. It's a bit too risky. I think we could see 150. I think to break below 150, you may need the help of the dollar. You may need the help of bond yields falling, and you may need the help of that. But there's two things I want to talk about. The Nasdaq. The Nasdaq is very interesting because we spoke about, is it going to fall more? Now, here's the thing. Yes, we may have NVIDIA and so on and so forth. But there is a possibility for me, there is a possibility that we may see 19,100, 19,200. Not right away, not tomorrow. But if you look at the weekly chart, again, and if you use your 21 week and everything, and I think there is a channel that could be showing 18,100, 18,200. Now, these are the things you have to keep in mind, but I'm not saying that yet you short right now and then you forget about it. But one last thing, I don't know how much time we have.
We have definitely another 7 minutes.
And this is not a stock tip. This is not a recommendation. This is a question to you, Jill, and to each one of you who is listening. If you look at the DAX, at the daily chart, is the DAX showing a head and shoulder or no?
In which chart? Weekly chart?
Daily. The left head is April 1st or April 2nd. Sorry, the left shoulder. The left shoulder is April top.
Yes.
The head is obviously May. And the right shoulder is around July 12th. Now, is this a pure or dirty or not clean head and shoulder? Some people said, oh, the right shoulder is higher than the left. It doesn't need to be the same distance. Oh, the right shoulder is almost close to the head. But if this is a true head and shoulder, Jill, then what do? You take the distance between the head, 19,000.
The neckline.
And the neckline. So we're talking about around 1,000 points. So we're talking about, taking around 1,000 points. So we're talking about 17,000, 17,200. Could this be a realistic, 200-day moving average is at 17,300. So this is just for people to think and to pay attention. And is this a possible trade?
And then the question is, and I think this is an interesting question. I think it's possible. I mean, we had this crazy rally that we saw now for 1.5 years of something that we are dreaming of. We know it will change our future, artificial intelligence, but still nobody knows how to make money of it. So I could imagine a correction. Now, here is the interesting question for me, and I go back to the Japanese yen. Could it be that the strengthening that the Japanese yen will get back to be a safe haven currency? I mean, traditionally it was a safe haven currency, and the strengthening of the yen happens exactly when stock markets stop to go up. So is there maybe also a connection within?
I think it lost that aspect when they continued to buy bonds and they continued to yield curve control. It lost it completely, but it could very well regain that if the things happen. If inflation start to pick up, they stop the messing around with yield curve control. And if either they raise rates up a notch, but they stay on guard. And if there are no surprises from upside surprises from U.S. inflation, as long as there are no upside surprises in U.S. inflation, then the expectations of further rate cuts from the Fed is really going to help the yen.
I understand.
And that could be the go-to reflex trade, which is because right now the Swiss franc is in a way the go-to a safe haven. I never trade it, I never touch it, but a lot of bank strategists are saying you never know with the yen, but if there's any more negative surprises and unforeseen surprises from the U.S. elections and so on and so forth, look at the Swiss franc. Speaking of the U.S. elections, by the way, I think there was something what we should have talked about, which we didn't talk about, which is the Trump trade. What is the Trump trade? And a lot of people are saying, some people are saying it could be, it's going to have tariffs. But fiscal policy is going to be easy, so the stock market is going to go up. But some people are saying for some reason the dollar is going to go up. But that, for me, is what happens if Kamala Harris leads in the polls. There are some interesting stock plays, the climate, the EV plays. But I do think the play that could gain both ways would be Tesla, because he has a very good relationship with Trump, and on the other hand, the Inflation Reduction Act and the Climate Acts from Biden and from Kamala, they're going to be good for EVs, so they would be good for Tesla. What do you think?
Look, I tell you the truth. For the first time in I thought always Tesla stocks is crazy and you should only trade it. How can you invest in something like that? The valuation is so off and everything. But for the first time in my life, in this spring, when Tesla was down almost 25%, I think, I bought actually Tesla and I own it at the moment.
You when you saw the price, you went against your thinking and you said, this price is a great, because you know what, a lot of people, well, even though there was some bad news and they delayed the announcement, the introduction of the robo taxi from August until October, what it is that it is increasingly becoming an AI company also.
Yes.
So, but technically right now, I don't know if this is the best price to get in. Because if you look at the daily chart, if you start from March, it was an inverted head and shoulder, and now we hit the target well above it. But there are some things that you may want to consider. So, for instance, I already bought AMD.
Mm-hmm.
I bought a few other semiconductor companies that are actually under the radar, and they did very, very well for us. But AMD, but they're not well known. One of them is AOSL, which has been doing spectacular. We actually gave this to our WhatsApp a broadcast group like a week ago, and if you look at AOSL, you can't believe the chart. Okay, AOSL, Alpha and Omega Semiconductor. So that's one thing. Micron is the one that I was thinking about buying because it's fallen a lot.
Mm-hmm.
But I think I'm not gonna be in a hurry because I have AOSL, I have AMD. But I think Micron probably, if it goes to 100 or 99, I think it could be something, because in its competition there are three of them. It's Micron, there's SK Hynix, and there is the Samsung. There's these three companies that are in the market for these ships, but I think 100 would be what will lead me to look into it.
Well, we are already at the end. I would like to even go broader here with this sim. The next time we have to do 2 hours. There is so much to talk about. I just will add that all the, Google, Amazon, Apple, they are developing their own chips, right? They will become competition, and that could take away the moat that NVIDIA at the moment has. So we will see huge changes there, and we still don't know who is the winner. Ashraf, it's absolutely amazing to talk to you. You make a little bit order also in my confusion that I have at the moment. So thank you so much for that. Also, the viewers, we have a lot of comments. I'm sorry we couldn't answer all of the comments that we had here. Still, it's an absolute pleasure to have you here every time, and I hope it's not the last time.
Hopefully, yeah. Thank you. Have a good summer, Jill, and wishing a good summer to everyone. Make sure that you put those dates that we noted. There are a couple of important dates, and then you will be free between August. I think you will be free between August the 2nd and the 14th. And that was for CPI. Yeah.
Thanks so much.
Thank you.
Bye, Ashraf.
Take care, Jill. Thanks, guys.